All right, let's talk BioRestorative Therapies, ticker BRTX. Their latest earnings report was, well, it was a real head-scratcher. It was basically a tale of two completely different companies, one that looked like a technical winner and another that looked like a total disaster. We're going to break down what on earth happened and what it really means for this company's future. So here's the game plan. First, we're going to hit you with those headline numbers that caused all the confusion. Then, we'll dive into the core conflict here, this massive disconnect between the company's incredible promise and its really, really scary financial situation. We'll look at management's plan to get out of this jam, see what Wall Street thinks of it all, and then wrap up with our take on what's coming next. Okay, so BRTX's results created a total paradox. One of the main numbers investors look at was great, but the other one, an absolute catastrophe. And that set up a major collision course with the market. And here it is, the split that just baffled everyone. On earnings per share, they actually beat the consensus estimate. They lost less money than Wall Street expected, so, check the box, that's a win. But the revenue? Whoa, just under $12,000. That's not a miss, that's a 97% cratering. You almost never see a disconnect this massive. So, how did the market react to this weird report? Well, it completely ignored that little earnings beat and zoned in on the revenue collapse. The stock got hammered, dropping over 9%. So the big question isn't just what happened, but why? Why were investors so spooked? And the answer to that really gets to the core battle happening inside this company. To really understand what's going on with BRTX, you have to think of it as two completely different stories being told at the same time. On one side, you've got this incredible, world-changing scientific promise. And on the other, you've got the very real threat of imminent financial disaster. The promise is absolutely huge. We're talking a fast-tracked therapy for chronic back pain, a massive market. Plus, they're in talks about licensing a potential alternative to the blockbuster GLP-1 weight loss drugs. I mean, that's exciting stuff. But the peril is just as stark. They have $4.5 million in the bank, but they burned through more than $8 million in just the last 9 months. That's why their own auditors have put out a going concern warning. Now, for anyone who doesn't know, a going concern warning is one of the biggest red flags you can find in finance. It's the official language auditors use to say, hey, we have substantial doubt that this company can even survive for another year without getting a big cash injection. To put it bluntly, the clock is ticking, loud. So, with this major cash crunch staring them in the face, what is management's plan? I mean, how are they going to build a bridge to get from here to there to give those amazing clinical programs a shot at success? Well, that brings us to their big strategic pivot. The plan is to fire back up their old aesthetics business called BioCosmeceuticals. The whole idea is to get some cash coming in the door quickly and, this is the key part, without having to sell more stock and dilute the value for current shareholders. They've even brought in a new commercial head, Crystal Romano, to spearhead this effort. This is their answer to the cash burn problem. And management is all in on this plan. The CEO, Lance Allied, said he expects it to be a very material contributor to the business by 2026. This is the story they're telling investors. Trust us, we can fund our groundbreaking science without hurting your investment. But this chart right here is exactly why the market is so skeptical. A year ago, this same business brought in over $230,000 in a quarter. This quarter, less than $12,000. They're not just restarting this business. They're trying to perform CPR on something that has completely flatlined. The risk that they can't pull this off is just massive. So this brings us to the market's verdict on this whole situation. How are investors weighing the promise against the peril, especially when the rest of the biotech world has been on a pretty good run lately? Wow, I mean, the contrast here could not be more clear. Over the past year, a major biotech ETF is up 24%. BRTX is down almost 30%. The company has gotten absolutely left in the dust by its peers, which tells you everything you need to know about how skeptical the market is of this turnaround plan. So the takeaway is pretty simple. Right now, investors are looking at the risks they can see and touch, the cash burn, the going concern warning, the basically non-existent revenue, and they're saying that these immediate threats are way more important than the long-term speculative promise of the science. The bird in the hand, or in this case the lack of one, is what matters. All right, so what does all this mean for the next few months? Let's boil this whole thing down into a clear, forward-looking thesis.
This is a story that is going to be defined by high risk and a few very specific, very important events. Everything, and I mean everything for this stock, comes down to hitting these milestones. The biggest one, the one to circle on your calendar, is the outcome of their FDA meeting in December for BRTX 100. After that, we need to see them actually complete enrollment for that trial, hopefully sign a big licensing deal for ThermoStem, and, critically, show us the money from that aesthetics business.
Okay, so here's our thesis for what comes next. In the next quarter, expect that cash burn to stay high. Revenue from aesthetics, it's going to be a wild card, lumpy, as they say. The stock price is going to be what we call a binary event. It's going to live or die based on the news out of that December FDA meeting. The trade here is a pure speculative bet on catalysts. The entire investment case boils down to one question. Can they land a major win, a partnership, an FDA nod, before the money runs out?
Given this dynamic, the incredible potential upside versus the very real, very immediate risk of going to zero, our rating is market perform. The risk and reward are just too evenly balanced right now. It's basically a coin flip until we get some clarity on those key catalysts. Ultimately, BRTX is a high-stakes bet. It's going to be fascinating to watch if they can pull a rabbit out of the hat before the clock hits midnight. And of course, this is just our analysis. It is not financial advice. Always do your own research.